Welcome to TradeTheNBI.com. This is John. This report is for the 24th of July, and well, we keep touching that lovely ABM yellow and supporting right off of it and bouncing, well, right towards highs in the pre-market. Actually, we made a new high going forward. Let's see what that number is. 28.1950. So despite all the gloom and doom out there, the reality is the economy is growing. We're in gold trend, even though we're not showing that paint bar on this daily chart here, and we're maintaining the highs. So all in all, positive stuff, as well as now you see the significant cross of orange below steel, and if that steel rises a little more, you'll have bullish open mouth. At the same time, you're just about to have green cross red. So all in all, things are fairly decent. Actually, the first turn in the shakeout back to a positive after the brief pause. So this is my point too about, there needs to be an impetus for people to want to sell even within a DOC spread. It was correct in the sense that from that high peak, we did revisit all the way back down to the low of the ABM yellow, but there wasn't anything systemically weak about the market in general, that we were at a very significant point in the shakeout readings. We'd already reset it from the dip below zero here, so nothing inconsistent. Now, making new highs, if the next run, you can see the NQ hasn't created that higher shakeout, that would be more problematic and something certainly more interesting. The fact the euro keeps maintaining itself right in this range just supports the notion that everybody's fairly pleased with where things are at. And finally the realization that in fact interest rates are going to continue to rise certainly woke some people up. This is always a strange counter move, kind of bizarre. Oil still holding up into this elevated zone. We had that huge bump up here. We moved to negative shakeout. It's rebuilt itself here on the move, but we did not get a dip of the orange, so I didn't expect much from this move. And again, it makes it very easy. ABM green is 14.29. Anything below that definitely still a short, even though you had the cross of the green. You might still see some positive action, but not enough that's going to be sustainable. That's a good sign that oil might ease off a little bit. They always do that run up right before summer and that, just to make people pay more for the travel season, and then they realize, we'll let it flop. Though I did see an article, $400 a barrel oil, someone was making the case for. Yeah, you can make all sorts of ridiculous assumptions based on limitations of supply and that, but it just hasn't been the case. And gold, again, this is a problematic weakness that isn't changed yet. So any gold bugs in that realistically could make the argument that, inflation, blah, 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 blah. But until you see a change in the labor participation where wages are rising significantly, not going to happen. That's not something we've even seen in the last decade. So it's going to take some more time. So it was a good start to the day, making the new lows that came through. We ended up with the beautiful resets. Got gold below the 50%, could not get going, but it didn't dip back to the zero, or supported right at the 23%. So it maintained a very decent bullish stent, and even popped up above the 50% for a brief section before revisiting that move back down to the 23. And interestingly enough, sets up a dip below the red line that will call price back all the way to that 27.96. But first we got that nice bullish positive peak, gold up near the highs, and it sustained itself, even though we started to get a couple of positive extremes that happened right in here. Like I was pointing out on the Skype chat, there just isn't enough range there for it to be interesting. And they filled back in with the dips a little bit right before we ended up turning around for another run of positive shakeout with cyan below red. And that was a nice clean takeoff and an easy one to follow there. But now you can see the conglomerate of blue dots signaling the peak was coming in. It was just a matter of waiting for a signal. And in my view, it's when you get this kind of spread between the orange and the steel. along with that cyan rising, becomes attractive at that particular point. And knowing what I had positive extreme wise to fill back in all the way down to the lows right here at the start of that candle, though that one usually is a little bit harder to fill, 2810. And in the pre-market, we've already dipped down to 2811, so pretty darn close to it. And a DOC spread to boot with the orange peaking. And that's what we really look for, is when we see those orange peaks above the plus 13.5, you know that you're getting near a range that is peaking out. And I've had this 2817 line before, and it's no surprise that we hit up against that and a little bit of resistance, but I would suspect that any retrace we get in here, even if it's to the 50, we're likely to see those during regular market hours, return attempt back to that 2819 range plus. So we'll see if the market's able to do that. If it can't get back to those, then you start to be more interested in if there's a continued weakness or breakdown. But given what we're seeing from the daily at this particular point coincides with what we saw from the weekly chart, and so on and so forth, and that has not changed yet, despite the fact that if you go to certain places, you're going to hear nothing about the positive potential of the market, but just that we could crash at any moment. And I think we've been hearing the potential crash since 1700 on the S&P. So long way from that point now. Here, 1,000 points later, people are still claiming that it's a short. So talk about misreading the direction of where growth in that is. Now, obviously, you can have some kind of catalyst that would drive it, world tension, blah, 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 blah. But this particular point, things are pretty calm and looking pretty optimistic growth-wise. So if those numbers contain, forward-looking, that things are going to continue positive, we should continue to see market fairly healthy. That's the long and the short of it for now, though. As always, though, I'll post anything that's significant, but definitely be watching these positive extreme retrace values. The lowest one goes all the way to 0975, and then in a big breakdown is where I'd be looking for the refill of this 23% dip right back here that had the positive extreme, the extreme move below the negative red line. So there you have it. As always, trade well. We'll talk again later.